Hello and welcome to the look ahead for Thursday, the 21st of March with me, Fiona Cincotta, Senior Market Analyst at City Index. So whilst Wednesday was all about the Federal Reserve, today is all about the Bank of England. Bank of England interest rate decision will be coming through at midday GMT. Tomorrow we've also got the SNB rate decision, PMI data from the Eurozone, UK and US, as well as Japanese inflation figures. So starting off though, let's focus on the Bank of England. They are not expected to move on interest rates. Decision comes after inflation data today cooled by a little bit more than expected, down to 3.4% from 4% in January. So the data does suggest that inflation is trending in the right direction, but it's still not close enough to the 2% target that the central bank want to see before they start considering cutting interest rates. Now, tomorrow's decision, there is not going to be a press conference afterwards. So that means the main focus will be on the vote split and also the statement. Now, we're expecting a possibility that the vote split could change slightly. So if we just cast our memories back to the previous Bank of England meeting, we saw that vote split was slightly more hawkish. We had two policy members voting to hike rates, one voting to cut, and the remainder were voting for rates to stay on hold. This meeting, we're expecting Jonathan Haskell to potentially change his vote from a hike to a hold. So that does suggest that the Bank of England will be slowly moving towards the rate cut situation, but we're not there yet. In fact, we're quite a long way from there. So, any imminent rate cut is still really not on the cards, particularly after service sector inflation was also stickier than expected. But we are seeing a slight slowdown in wage growth, which will be helping to ease concerns over inflationary pressure. So this is the pound US dollar that we're looking at here. Now, as we can see, we've been focusing on this chart quite a bit. We've seen that the pound has fallen quite spectacularly from that 129 high in March, also the 2024 high. It's been trending lower. We found some support just recently on that rising trend line that dates back to mid-October or the end of October, and that's the weekly low there, support 126.70. So sellers are going to be looking for a breakdown below that level in order to test the 126 level, which has been a support and a resistance across the past few months. And then on the upside, if we find that potentially we have a slightly more hawkish than expected Bank of England statement or vote split, then we could see the pound recover. Buyers are going to be looking for a move above the 127.70 level. That's the February high, in order to bring the 128 into focus. Just looking ahead to the US dollar, I think it's worth mentioning that this recording is being done prior to the Federal Reserve interest rate decision, which will take place in just a few hours. But as you can see from the dollar chart, it's always interesting to see where the US dollar index is trading, to see how much of those moves in sterling US dollar is actually related to the US dollar and what's related to sterling. As we can see, the US dollar has had a really strong rebound from the March lows at the 102.35 level. It's risen above now that 200 SMA, and it's pushing towards the 105 level. If we do get a slightly more hawkish Federal Reserve, or if they do happen to downwardly revise the dot plot, then we could see the US dollar pushing higher towards that 105 level. As far as support is concerned, obviously the 200 SMA is the immediate support there. And below that, then we'll see the 103 level is also offering support. So then I also mentioned that we've got the SNB rate decision They are expected to leave interest rates on hold. Also got PMI data coming through. Obviously, the UK PMI data is going to be massively overshadowed by the Bank of England interest rate decision, but the data is expected to show that UK economy did improve slightly in the month of March. So we've seen the service sector remain strong and a slight improvement in the manufacturing sector as well. US PMIs could also be overshadowed by the Federal Reserve interest rate decision today. Again, just there, we're expecting to see a slight cooling in the PMIs, with manufacturing easing to 51.7 down from 52.2 and services to 52 from 52.3. So that's just still, both in expansionary territory, just easing slightly. Then we've got Eurozone PMIs. They are expected to show a slight improvement in the Eurozone. So moving to the PMIs are expected to see services improve to 50.5 up from 50.2, and the manufacturing up to 57 from 46.5. This is sort of in line with what we've been seeing, broadly speaking, from the Eurozone and from Germany, is that it appears that the downturn has bottomed out and we're starting to see an improvement in the outlook for the economy. The PMI data would support that. This is a chart of the euro US dollar. Now, again, we can see this is again down to some of that USD strength that we've seen. The price has rebounded lower from the March high of 109.80. That was on that falling trend line dating back to the end of 2023. The price is tick lower. It's just testing at the moment the 200 SMA. Again, just mentioning this is prior to the Federal Reserve interest rate decision, so we could see a move either rebounding off that or breaking below that, depending on the Fed's stance. But that 200 SMA is at the level of 108.35. If we do get a break below there, it's going to bring the 108 level into focus. If we find that buyers can actually defend that level, then they're going to be looking for a move towards 109 and then up. That's the weekly high and then a move above there could open the door to that 109.80 level. So just finally, the other one I'm going to bring in here, and this is on the back of the US PMIs, is the Dow Jones. We can see here that actually this is just trading very much in a holding pattern. Where your buyers are going to be looking for a breakout above the 39,284 level, the all-time high that we saw at the end of the end of February. That will bring the 40,000 into focus. Sellers potentially supported by that downward falling RSI could be looking for a break below the 38,800 level. That's the March low. If we get a break below there, then that's going to test 38,000, is going to come into focus potentially, and that is the February low. So thank you very much for watching. I hope you've liked what you've seen. If you do, then please do give this a like, and if you would like to receive more videos like this, then do subscribe.